you all are in for a treat. I have a special guest who is a top producer in the mortgage industry. He has also recently launched his own independent mortgage bank that this year will do $400 million in volume. And of that $400 million, he personally will fund $40 million. So we're going to learn his story. We're going to learn from his successes, but we're also going to learn from someone who didn't start his career in mortgage. He started his career in private equity. He has degrees in real estate, finance, and accounting. He once earned an award for the greatest innovation in cannabis. That's right. He comes from that industry too. He is a Orlando native like me. He is one of my newest friends, but he is a badass in the mortgage industry. Well, for the rest of it, you're just going to have to check this out. They don't teach this shit in school, but they should. Welcome to the Loan Officer Podcast, hosted by me, Dustin Owen, one of the most influential people in the mortgage industry, along with my friends who've lived it, built it, failed at it, fixed it, and scaled it. This is not a show just for mortgage professionals. This is everything I learned because I became a mortgage loan originator. This is the Loan Officer Podcast. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest. This dude absolutely crushes it in the mortgage industry. He started in 2018. By 2019, he was funding over 100 units for $37 million in volume. Last year, he started his own mortgage company along with a couple business partners. He hasn't always been in mortgage. In fact, there was a time that he ran and operated a cannabis company, at which point he was even an award winner. He's a dad of two. If he's not working, he's probably working out, or he's probably taking his kids to Disney. He is Fusion's only, the one and only Chris Hardiman. Chris, welcome to T-Lop.
That was a great introduction.
Yeah, I tried.
And thank you. Yeah, it's great to be here, Dustin.
Yeah, I'm exciting. This is probably at least a year in the making.
Yeah.
I have, and I told you this offline probably 6 months ago, but I've admired the work that you and your partner, Nick Long, have been putting in, probably because we were quote unquote competitors for the past 5 to 7 years.
Friendly competitors in the space with circles that overlapped in like a million different spots, but yeah.
Respected competitors.
Correct.
Like anyone who's tuned in the show long enough know that I'm a big proponent of being friends with the men and women who do what we do in this industry at a high level, regardless if they work with you or if they're trying to compete in the same space that you're trying to play in. Most of that because I believe there's enough business to go around. Mm-hmm. And what I've honestly found is most times we're not competing.
Yeah, and respected competitors is never what I called it before, but it's the perfect label to put on it because you're right. You know the guys and the girls that are in the space doing the things at a high level in a way that you can admire, right? You're up against them, no doubt about it. But, as they say, a rising tide raises all ships, right? So to get those people around you and keep it close, I nailed it. I'm going to start using that.
Yeah, no, that's, I looked at it this way. There's people that if I knew that my borrower was talking to them and me, mm-hmm. I would actually try less hard.
Yeah.
Like I would try less hard, meaning I wasn't going to go to the bottom of the rate sheet to win that loan.
Fair enough.
And make no money.
Correct.
When I'm like, oh, they're working with Colleen Mitchell over at CMG.
Yeah.
I love Colleen. She's great at what she does. Or they're working with Laura Myers over at the mortgage firm. Or you
Correct.
Guys, like, regardless if you're a prospect at Rate or now you have your own company, Fusion.
Yeah.
Like it was more about, I know that buyer's going to be taken care of. And it really wasn't worth me like going to the jugular to win it.
Yeah.
And now there's been other times, no, I'm
Correct.
going to the jugular to win that.
Correct.
And there's also people that I will tell you, because I think you and I are about 10 years apart in life. And I've always loved and admired and respected the work you and Nick Long have been doing because there weren't many young people in our market doing what my partners and I were doing. Mm-hmm. And I kind of was able to look at you guys and say, our industry's in good hands. If there's guys like this coming behind us, like, yes, you were pushing us. Yes, you were taking market share from us. But as a CMB, as someone who loves our industry, I was more proud of that than I was feeling threatened. Plus, as you said, rising tides, what is it? Not sinks all boats, raises all ships. Yeah.
That's a huge compliment. Huge compliment.
Well,
Thank you.
well earned. Well earned. So here's what I want to do today for the audience.
Okay.
I want them to learn the Chris Hardiman story, right? And we don't have to go into the minute details that you and I just went through in the green room when we were talking about like how to structure today's episode.
Yeah.
But there's something to be said about knowing your backstory. Like you did graduate from Florida State University in 2010. You do have 3 degrees: accounting, real estate, and finance.
Yeah.
And you didn't start in the mortgage industry.
No.
So we're going to touch on that.
Okay.
But you did get into the mortgage industry as a loan originator in 2018.
Yeah, previously on the finance side.
And we'll discuss that.
Yep.
Within 12 months, you figured out how to become a top producer. So there's lessons in there that I want to be able to unpack.
Yeah.
And then you went from 2019 all the way through 2025 working for the man.
Yeah.
And being a top producer, then a top producing branch manager. But now you've gone out on your own. You've started your own mortgage company.
Correct.
So there's lessons to be learned. There's other people that are going to listen to this say, I wonder if I could be the next Chris. I wonder if I should be
and
the
the
next
answer is
Chris.
absolutely yes.
Well, yes, you could.
Yeah.
Well, we'll start with
Yeah.
yes, you can. Anyone can do this.
Yes.
But you may give some perspective that maybe some people are like, but I don't know if you'd want to. Right? If you know the truth, if you know the reality.
And the answer to that is also absolutely yes. I don't know if you want to. Yeah.
So, and I think that's where, like, that'll be the crescendo. That's where we'll kind of wrap things up. And at the end, I'm going to tie it down with asking you some normal questions like, hey, what's one piece of advice that you are giving to your children who are now 8 and 10, but as they get
6
older,
and 8.
Oh, 6 and 8,
a little younger.
So a little younger, 6 and 8,
Yep.
that you're gonna make sure you raise them with, but maybe because you learned it the hard way, not because it was taught in school. And I'm gonna ask you questions like, hey, what's one of your favorite books that you've read? And if not book, like it could be influencer or it could be podcast.
Yeah.
But that's how we're gonna wrap it up.
Okay.
But what we're gonna do first is we're gonna start with what you did before mortgage and how it shaped you becoming the originator that you are, and now the mortgage executive you are. But before we get into it, we have to take a quick pause, let you think about this.
All right.
We're going to hear from today's show sponsor, pay some bills, and then we'll be right back. Check this out. Y'all, something big is happening at Lower Mortgage. And if you're paying attention to this industry, you've probably noticed. In just the last month alone, Lower has added some serious horsepower. We're talking top producers representing over $350 million in volume. These aren't rookies kicking tires. These are heavy hitters who've done their homework and made the move. That should tell you something. On top of that, Lower just acquired Movoto, a top 5 real estate portal with over 150 visitors just last year. Before that, they brought in Neat Labs, and now they're launching Lower OS, a next-gen mortgage platform that's cutting loan delivery times down to 10 days. This isn't a company standing still. Lower doubled their volume last year, and they're projecting another 40 to 50% growth this year. The best in the business are taking notice, and they're voting with their feet. Here's the reality. The companies that are going to win in this market are the ones investing in technology, building real infrastructure, and competing at scale. Lower is doing all of that. They're going head to head with the rockets of the world, and they're built for originators, not against them. If you're a producer who wants to be a part of something that's actually going somewhere, not just surviving, but growing, this is the moment. Lower Mortgage, the momentum is real. All right, so we're back, Chris. You've had a chance to gather your thoughts.
Yes.
And we're going to start off, you're 22, you're 23.
Yeah.
You're leaving Florida State University.
Yep.
You have your 3 degrees. What was your thought leaving university? What did your career look like, and what was motivating you?
Oh, man, that's a great question. We should have gone through this in the green room. I would have been more prepared. I will tell you, and as I've grown and as I have matured, I'm not mature yet, but I am maturing.
We always do.
Yeah.
At 47, I'm still maturing.
I'm becoming a better planner
Okay.
at this point. At that point in my life, I was not a planner, right? Like my decision to stay for the extra degree was driven by the fact that I was 30 grand underwater on a house that I'd purchased in 2006, and I didn't have 30 grand to come to the table with, and I didn't line up renters. So what the heck? I already needed to stay in this house another year to plan for what I'm going to do with this thing. I might as well go back and get another degree in accounting if I'm already stuck up here, right, and can't get out of this.
And they're probably that's honestly a great answer.
Yeah.
Great answer. Great answer.
Yeah.
But I think they also were building College Town at that time too. And you're probably like, ooh.
College Town really got development dollars post the national championship, which I was not there for. I was there for the worst of times. The worst of times. Where all my guys in Gainesville were having the best of times. So, but that's okay. I digress.
Yeah, you know what? We can't have it all. We can't have it all. But that's good perspective. I didn't know that. So you bought a rental property when you were 18 years old, a freshman at Florida State.
I was 19.
Okay.
Bought the house I was living in. So did freshman year. Bought the house that me and my buddies moved into sophomore year. And well, I don't need to tell a mortgage and real estate professional the story. We all know how 2007, 2008 worked out. So,
correct. Yes. I mean, I still own a home.
Yeah.
That at one time I owed $235,000 on it, and it was worth $130,000.
Yeah.
So it's a rental property. Someone's like, "Oh, that was so smart of you. You kept your first house to be a rental. You were house hacking."
Yeah.
I'm like, no. I was trying to move into a larger house in a better school district to raise my family, and I wasn't willing to shell out the $100,000, nor did I have the $100,000 to cover the difference. And I knew I could rent it, and I felt like I wasn't in a position where I had to short sell it, which could have been an option. But okay, so you stayed the extra year, but and you weren't much of a planner, because who is at 22 or 23? But what did you do coming out of school?
So I'd always loved just. Not even like businesses, like that's such a cheat. I'd always loved the fun of like kind of just making your day, right? What am I going to create in my day today? What am I going to get out of my day? In college, I started a restaurant with a good buddy who was the founder and the principal and the concept behind it. He actually ended up franchising it, and there's one in Altamont. Funny enough,
what is it?
The Grapevine.
Okay.
Yeah. But like the first location, like. Dude, we bootstrapped that thing, like the electrical, the like everything, the painting, like all of it. So, moral of the story is, I finished these degrees. It was 2 degrees. One was a double major, then second degree in accounting, and I had no clue what I was going to do. Went to a job fair, and I got sold the classic vision from the life insurance company. And we all have like that buddy who like, I'm going to go be a financial advisor, but write down a list of 100 of your your friends' parents who you can call on right away
and go sell them life
and go
insurance.
sell them a whole life policy.
Yeah, the only thing worse is probably selling Cutco knives.
Correct.
But very similar concept.
Yeah.
Which is crazy, because like when I coach loan officers, especially those that are newer in the industry, I make them also start with a top 100 VIP list.
And there's nothing wrong with that.
Well, the difference is this. Why I love mortgage is because I never have to sell someone something they don't need or want. Meaning, if you don't want a mortgage, you're not going to buy what I have.
Not going to happen.
Right? You don't wake up one day saying, I think I want to go in debt for 30 years. Let me go ahead and call Chris over at Fusion and get a loan.
Yeah.
You wake up saying, I want to own a home. And then you're like, crap, but I don't have enough money to pay cash. So then they have to call guys like you and I. So when I'm coaching LOs, I'm like, look, you're going to start with your top 100 VIP, but not to ask them to do a loan with you, to get them to refer you or connect you with a client. Clients, as we know, are realtors, builders, financial advisors. So you're at, like I said,
it was Mass Mutual.
You were at Mass Mutual.
I mean, LinkedIn exists. It's no secret. You can go back that far. Yeah.
And coming out of college, like you're going to make all this money, but you have to go sell life insurance to these 100 parents of your friends.
And that's not how it shook out. Although some great friends, parents sat down with me and let me, take them through it, and they all gave wonderful feedback. So I moved to Tampa.
Okay.
Do that, and remember what time it is. Like, it's 2010, so it's
coming off of a really bad economy.
Bad. Not like we're in it. We're still in it. Yeah. So I'm cold calling, walking into small business owners in strip malls, and I'm trying to talk to the owner, and I'm trying to sell them an annuity and a whole life policy, and they're literally trying to figure out how they're going to make payroll and rent that month, right? Like that's the market I came into. So, as we progress through life, and this is one of the takeaways that, you always learn something. You always learn something. And one thing I learned from that was, the classic Ted Lasso, like be a goldfish, memory of 3 seconds. Like I was called the worst things, the meanest stuff said to me, but you know what? Move on.
Yeah.
Move on. Go to the next one. Right. But it drains you. Like it takes a toll on you. And it was difficult and not where I wanted to be at the time. I'll tell you this, as with any industry, when you enter at the bottom, I had stayed in it, like the realtors that stuck through it and did the REOs and were still in it and came out on the other side. Whoosh, they freaking took off like skyrockets. Had I done it, probably would have been a similar story.
I was going to say, it's interesting. I have a warped sense of that time frame.
Yeah.
2008 was rough, but like if you were in the mortgage industry, I was still riding on guarantees in 2008.
Yeah.
Like every mortgage company that I worked for would go out of business, but then like 3 months later, I'd get, like not 3 months later, when they went out of business, I'd get hired by someone else.
Yeah.
And I'd get a guarantee.
Yeah.
And that company would go out of business. I got hired by someone else, I'd get a guarantee. So
Crazy time.
08 shielded me because I was basically on a 9-month guarantee for the whole entire year.
Yeah.
And then 9 was rough, but like I ran out of savings in 9. Thought I was going to have to call my dad to get a loan.
Yeah.
Luckily, rates dropped, started doing a bunch of streamlined refis, and then kind of saved the year in the last 5 months.
Yeah.
But 10 is actually when David, Mike, and I started to gain momentum and traction. And like you said, like timing in business has so much to say. I wouldn't be fair to me and my partners and our leadership team if I didn't say we weren't somewhat a part of our success. But our success was partially because of timing. And we were growing and building in 10, 11, 12, 13. So by the time 14 hit, we had the machine built. Yeah. We had the army put together. You're looking back saying, had you stayed at it, there's a good chance you could have been successful and rode that wave up.
Yeah.
But that's not how life works.
No.
So you go out, you're going to master of your own destiny.
Yeah.
So what'd you do, and we'll kind of speed round this.
Yeah.
What did you do the next 3 opportunities? Take a pause on the weed journey because it's a really funny story.
Yeah.
But then get me to 2018 when you got your license.
Yeah. So we'll speed round through it. So after I decided that insurance sales was not for me, and I'll tell you, there's like a lot of recurring themes throughout like my life and my stories, and much of it falls back on excellent mentorship, really powerful mentors that have been throughout my world, and a really strong network that I've worked hard to cultivate and grow and expand upon. So the next opportunity was presented to me by actually my current partner and CEO of Fusion Home Loans, Doug Long, who has been just a force of driving energy throughout my career. And he started a commercial debt restructuring firm, represented borrowers. During that time, he just sold his national mortgage company to a large REIT, and he was non-competed out of the space. So he started this firm. I worked for that firm for a number of years as an analyst until the market started to heal, right? There wasn't as much commercial debt to restructure and work out. Went to go work for a quasi-family office, quasi-PE shop that sat on the other side of the table in a lot of the commercial debt restructuring conversations. They were buying a lot of the paper of the borrowers that we were representing. So that was Sentinel Capital. I went to work for that group immediately following leaving Covendium. Did that for a number of years, started as an analyst, moved into a portfolio management position, which gave me a lot of other interesting opportunities and exposure to other industries. Ran one of our aviation portfolio companies, managed a portfolio of commercial real estate, just really kind of whatever was needed because it was a very small group.
You were a finance and accounting guy. I mean, the stuff you were doing on the debt restructure workout was probably very intensive with the I dotting, T crossing, and the financials.
Intensive, but also, man, like, one of the exciting things about being a loan officer is you get to see all the ways that other individuals make their money. That job was how do businesses make money?
Yes.
So one day I'm representing a hotel group. The next day I'm representing a restaurant. The next day after that, it's self-storage. But Friday, I have to jump into an aluminum extrusion manufacturing and smelting plant.
I would have loved this.
And it's like, what? Like,
And,
all right,
and you're a problem solver. You're like, as a loan officer, we have to find a way to yes.
Correct.
In many instances, we're finding a way to yes. You're finding a way to yes on your end, but it was with restructuring commercial debt after one of the greatest economic downturns of our lifetime.
Which was wild, right? And you kind of always hope to get a good banker. And the good bankers, provided their hands weren't tied by like a loss share agreement, the black SUVs rolled up or whatever. But the good bankers, you always knew, especially if they were like at the end of their career and they were about to retire, you're like, oh man, I'm screwed. But if they were going to be around for this thing to turn back around and they didn't want to burn
a relationship,
all the entrepreneurs and the grinders, the ones who are going to be coming back looking for good paper in the future, there was always a resolution to be had, but it was interesting.
Yeah. So you worked for PE, by the way, private equity. For those that are playing along at home, I get the question like, well, what is PE? It's private equity.
Yeah.
So it was a wealth fund ish that you worked for. They were buying some of this restructured debt, right? That was an investment they were making, but they also probably invest in companies or had a portfolio of companies that they also either owned or partially owned. So you worked for them as an analyst.
Yep.
Before just kind of up and leaving and moving to California?
Yeah. So I wanted, again, small company. I think there was like, I don't know, maybe 8 W-2 employees there, right?
Okay.
Like if that. I wanted something bigger. I wanted to go on an adventure. I wanted to, see what was outside of Orlando. So yeah, uprooted and moved to Los Angeles. Again, I'm still in my head, like, I got a degree in finance, I got a degree in accounting, like I have to use these degrees, right? That's what you do. You go to college, you get degrees, you go get a job that uses those degrees.
Yeah.
So I moved out to LA, got interviewed with the finance department of Prospect Mortgage.
Yes.
At that time, top 10 IMB.
Yes.
Right.
And now a lot of those people are still in the industry.
Oh,
a
yeah.
lot of them are probably at CMG right now. Honestly, if you look at Prospect to Homebridge to CMG, there's a lot of people that have that Prospect lineage.
It's so funny.
But
a ton of those guys were at guaranteed rate when I joined what is now Rate.
Okay.
But then they dispersed, I got one at the money store, they're all over, right?
Yeah.
Mortgage is.
Shout out to Aaron Hahn, if that's who you're talking about, at the money store.
No, John Palmiato.
Oh yeah, I know John. Yeah, well, Aaron
JP.
works for John.
Yeah, JP's a great dude.
But so you worked at Prospect Mortgage, but not as a loan officer.
No, I was in the finance department.
So for those that don't know, give us a 45-second recap of what did your work week look like working in the finance department at Prospect Mortgage?
Yeah, so my aside from a number of duties, and of course when it comes to like month-end close, you're buried in like journal entries and crap, and that was actually how I met my wife. She was in the accounting department, and her boss had to approve my journal entries over like $5 million, which in a company of that size is like all of them.
Yeah.
But neither here nor there. So I primarily worked with financial planning and analysis at the corporate level, but also for the net branch P&L model, right? Like, so all of whether it's as large as a divisional president all the way down to an individual LO who decided to run a net branch, my team was responsible for the preparation and delivery of their financial statements on a monthly basis, and then diving deeper with them to help them understand what that document actually meant to their pocket, right?
Yeah. And this is a great segue. If you have never run a P&L, then this is going to be new information for you. If you've run a P&L, you're going to chuckle and laugh when I say this, but most of us in this industry didn't go to school to be an entrepreneur. We didn't go to school to develop marketing strategy. We didn't go to school to learn how to operate a business. But when when we have success and they give us titles, and titles come with responsibility.
Correct.
And then eventually we have desires. Those desires are to make more money, but we think making more money means running our own branch. Then all of a sudden you've thrown yourself into, you're a financial strategist, you're an accountant, you're a marketing strategist with no technical background or experience doing so.
Yeah.
Chris was the guy that had to tell a branch manager, you're not profitable, even though you just funded $5 million last month or $10 million last month. But more specifically, here's why you're not profitable, and here's what you can do to become profitable.
I had to tell divisional presidents with like $1.5 billion divisions, like why they're losing money, right?
And they didn't understand it.
And they don't want to hear it from a 24-year-old, right?
Yeah, but you're looking at it saying, volume does not pay your bills.
Yes, does
volume
not always
does
equate to profitability.
Does not pay your bills. No. Loan officers, yes, you get paid on volume, high freaking five.
Yeah.
But volume isn't what pays the bills. Revenue pays the bills. It's simple math. You want more revenue coming in than you do revenue going out, right? I mean, or expenses going out.
Correct.
That's basic fourth grade math. Anyone can run a P&L once you understand that. Unfortunately, our U.S. government can't figure that one out, but
someday
the rest of us are asked to be able to figure out, how do I make more than I spend?
Correct.
So you were that guy on the back end that was helping branches account for their revenue, account for their expenses, and then you're showing them the data on a monthly basis, called a P&L call, and reviewing that. So you did that, but that ultimately led to you becoming an LO, right? Ultimately.
So,
oh no, we got
funny.
The weed story.
Yeah, the weed story's in there. I mean, look, what led to me becoming an LO is all roads lead back to Doug Long when it comes to.
And by the way, shout out to Doug. Doug's been a mentor to me. He hasn't had to be. He has chosen to be.
Doug has been a mentor to so many.
I respect so much out of Doug, and he's an Orlando local. I call him local legend. Yeah. But he's actually well known throughout the entire industry. My favorite.
Oh, you go to NBA with that guy. It's like bananas.
My office for 15 years was Doug's office. His Pinnacle office.
Oh, that's right. The building there on Lee Road in I-4.
Yeah, like literally I joke. I go, that toilet that he used is the toilet I used for 15 years because it was the only office in it's like 16,000 square feet or 20,000 square feet.
Oh, it's got to be bigger than that.
Well, right? the entire floor was about 20,000 square feet.
Got it.
Right? So the entire floor, but his office was my office.
He had the executive bathroom.
Yes, and it was the only one that had its own bathroom.
Got it.
So so like Doug and I are tied even to the same toilet at this standpoint.
There you go.
But yeah, so all roads lead back to Doug, and you eventually reached out to Doug when you were looking to make a career move. Yeah. But I don't want to skip over. Yeah. You ultimately left Prospect Mortgage to go start your own company. The company you chose was a recreational marijuana company in the greater Denver area.
Yeah, Colorado, greater Denver area.
You ran this for how long?
Boy, that was an adventure. All in from inception planning before we even, signed a lease, developed a single thing. I was out there for 5 years, and I had met my wife in Los Angeles. We were not married when I moved. We did long distance at the time because before I built the cultivation facility and the manufacturing facility, which was a very technical environment, it took time.
So you're growing weed, then you're processing it for resale.
Yeah, so we're
legally.
Yeah, and we were a wholesaler, so we had no retail presence. Okay. So we were cultivating all of the cannabis, right?
That's the seeds, the germination.
Yeah. So full cultivation facility, taking it all the way to the point of a harvest, then flash freezing all of the plant material, and then further processing the plant material into the oils, all the various.
Did you have a partner in this?
TLOP Unite is not your typical mortgage event. This is the first ever TLOP cruise experience built exclusively for originators. And for 4 days, it's not about the speakers, it's about you. We're talking breakout strategy sessions, real conversations, curated events, and uninterrupted access to a community that helps you grow. If you're serious about taking your career to the next level, this is where you need to be. Space is limited and the price is right. So click the link now and learn more.
So it's funny, the industry at the time, and it's still like this in some states, you can't have partners unless they meet certain residency requirements. So the way the laws were established almost restricted interested parties that wanted to get involved to be debt.
Okay.
So they couldn't have equity. You could get as creative as you wanted to with like convertible debt, with, you know, carries, preferred, no, all the things that you would see in like any sort of high level like IB conversation about debt and how you can structure it. But no, I didn't, because they had to put their money in.
Like, were you
as
just a
debt.
guy that you loved the product yourself and you're like, I would love to have a business where
No. No.
like you're talking and
It was just hot at the time. Like, I don't know if you, like, you must have had some friends that got caught up in
yes.
this green rush.
Yeah, I have a
this
cousin.
Is it. We're gonna make $1 billion. It's gonna be, that was it. You know,
I have a cousin who is in the industry and he's smart as shit and he knows his shit, right? Like
yeah.
and at one point I think he was going to move out west. I don't know
Yeah.
if he ever did. I don't think he did. But oh yes, and I have lost my fair share of tens of thousands of dollars on weed stocks personally.
There you go.
Like
right?
I've lost
Yeah.
You name that weed stock, I probably owned
Yeah.
it, and it's probably down 75% right now from when I bought it.
Yes.
So yes.
So that was it for me. It was a perceived market opportunity, an emerging industry, an emerging legal industry. It's been an industry for some time.
Yes.
An emerging legal industry where I saw an opportunity and tried to capitalize on that opportunity.
But I mean, offline, you and I go grab beers one day, but I'm just thinking, but you had to learn all of that. You didn't know
Yeah.
crap about growing, did you?
No,
like you didn't
nothing.
come from a family that your dad owned a nursery and you had grow houses, right?
So super funny. One of my best friends, again, back to
Yeah.
my network and my people and my everything, a really good buddy of mine. That's an interesting question. His name's Andrew Engelman. Andrew, his family, the business has now been sold. Super sad story. His father passed away. They owned the third largest plant cultivation company in the United States, company by the name of Herman Engelman Greenhouses. It has now subsequently been sold to Costa Farms. So if you go into any Home Depot, Lowe's, whatever, you see the little red angel on plants, the exotic angel brand, that was his brand. So he was third generation, you know, horticulture, like on a large scale. Like we're talking about hundreds and hundreds of thousands of square feet of greenhouses, irrigation systems, like, you know, all of the things that you could imagine. And he, similar to me, was looking for a fun adventure at the time, so he moved out to Colorado and started a business with me.
Bingo. That's what I was going for. And then tell us real quick, what was the award you won? I think it's fun to say,
Yeah.
hey, have you met my friend Chris Hardiman? Not only is he a badass mortgage professional, but this dude actually won an innovation award
Yeah.
for the cannabis industry.
Yes, so the award that we won was the Cannabis Invention of the Year award. It was 2016, 2017. I forget.
time
I
frame,
forget
yeah.
the specific year. I'll send you a picture so you can like drop it on top of this part of the conversation.
What was the invention?
So, and again, like this comes down to like finding smart people, surrounding yourself with smart people. What I did was I built the facility that could grow the plant. I had the manufacturing facility that could refine the oil, had the right licenses, all the things. I teamed up with two really smart guys who figured out how to take that oil, which is like really crazy sticky oil. Like it's a very sticky substance.
Yeah.
And they figured out how to use like other surfactants and emulsifiers to thin that oil out enough and also get the dosage precise enough that they were able to put it inside what's called a pressurized metered dose inhaler, a PMDI. So if you know anyone who's an asthmatic, that medical device that they use to deliver that active substance, what we did was we took either a measured dose of THC or CBD, again, teamed up with some smart guys who had developed this sort of IP, and we
Intellectual property for those playing along at home.
Yep, sorry, I do that.
Yeah.
Acronyms. And we created the Aero inhaler, which was the product, right? A PMDI that either got you high or delivered
Calmed you down.
CBD,
Yeah.
which has, you know, a massive amount of medicinal benefits and effects that go onto the CBD side of things.
Super cool. I bet you're a fun guy to have at trivia. I bet the amount of information you know about just random things Works out well for dinner parties and
Yeah.
Thursday night trivia at the Castle in College Park.
Yeah, there's a lot of random junk bouncing around up there.
So I'm going to fast forward. So Chris's story goes like this. He does that for what, 5 years?
5 years, yeah.
You're going to be the next billionaire. This is freaking amazing.
Nothing can go wrong.
Everyone's like, look at Chris. He comes home from Colorado. He's going to be it. Hanging out with Snoop Dogg. I don't know if you hang out with Snoop Dogg or not, but that was the trajectory you were on.
Yeah.
But you're realizing that your buddy, by the way, the son of your Doug,
and
right?
my best friend,
and your best friend, and
one
your business partner.
One best friend is out growing weed with me.
Yes.
My other best friend
is
stated
loans,
mortgage,
slinging loans,
killing it.
He's killing it, and they're like,
yeah.
Doing what best friends do. Like, hey man, what'd you do last year? And Chris gave his number, and Nick's was double. The next year, Chris gives his number, which by the way is staying the same.
Yes, correct.
And Nick's is now 3x. Then Chris is given his number, which is the same as it was the previous 2 or 3 years.
No, that year I got a $22,000 raise.
Oh, okay. Awesome! So
Gave it
you're
to
up,
myself.
you're up
Yeah,
18%.
Yeah.
So he got an 18% raise. He's super proud of the 18% raise. However, his
Nick made $500,000
his best friend's making
whatever.
$500,000 slinging loans to Orlando, Florida.
Yeah.
And that's when you decided, hey,
Enough's enough.
enough's enough.
Yeah.
So walk us through this, because you started in 2018, but you did really good volume and good units in 2019. What are 3 things that you did? Because you funded 100 units, 137 or 37 million-ish, 100 units-ish. What are 3 things that for the loan originators tuning in that you did that you're like, guys, if you or girls, if you can just do these 3 things, this is what I did that worked really well?
Man, I don't know if I can give you 3 things, but I know what the things are that I did. Maybe it'll be 3, maybe it'll be 2, it might be 4. I don't know. So when I moved back to Orlando after getting licensed, I went to work in AmeriFirst.
Yep, you're married with a kid, right? You're married
with
with one kid, and you're moving back to Orlando, walking away from a business or selling a business that did you end up selling it?
Sort of. Yeah,
Okay.
I mean, the answer is yes. Sold the brick and mortar. It took a little bit longer to sell the brand and the intellectual property, but eventually sold off the bits and pieces and kind of unwound it all. So moved back. AmeriFirst office was right there on Orange Avenue by Real Fish.
Which is downtown Orlando.
Perfect.
Yep.
Yeah, downtown Orlando. I rented a house. We sold our house in Colorado, rented a house that was probably half a mile from the office.
Okay.
And we were very fortunate, some would say blessed, that my wife worked in accounting still. She was working for a mortgage bank out in Colorado. And they were like, hey, you can stay on and work remote. So it was huge that we had that income at least still coming into the house. But I told Supatra, that's my wife, I'm like, hey, if I'm going to make a go at this, which I have some things going for me, Orlando's my town. Yeah. So I got my network, right? Like I've got Nick, and we're going to talk about that because that's important. But I'm going to need to work like 60 to 70 hours a week, nonstop, and I'm going to do it right out of the gate, and I'm going to see if this is going to work. I'm going to make a go at this because I've seen it be successful for friends and people who I know, but it's going to be nonstop out of the gate because I might have to pivot back into like a salary job or like something. I don't know. Go back, get an MBA.
Corporate finance.
I don't know. So she was on board and came back and grinded like quite literally.
What does grinding mean to you though?
Grinding means I am the first one at the office. I am the last one to leave. I am doing nothing but green activities. And I'm sure like your listeners know what those
sales and
are.
marketing.
Correct.
You're a sales, marketing, and networking. That's your job.
That's it, man. That is it. And it's so funny. Like,
was it realtors? Was it builders? Was it financial advisor? Were you calling your friends and family, begging them for a refi? Like
it was realtors, and it's so funny because I started with the proximity of Winter Park offices that were around the AmeriFirst office because I figured I could get in there close, and I called a Keller Williams office at the parks. And I started in the.
Is that Denise's back in the day? Denise LaHoop?
Yes,
Okay.
it was. And I started in the A's, and the first realtor that I called was Emily Armstrong.
Okay.
And I got her on the phone, and I said, "Hey, Emily, I'm Chris Hardiman. I'm a new loan officer at AmeriFirst. I'm looking to meet realtors here in town. Can I take you out to coffee?" And she was like, "Oh, wow, that's great. I love AmeriFirst. Nick Long is my loan officer. I'm going to have to pass." And I was like, "Well, you know what? If Nick ever drops the ball, like,
No way.
I'm here."
You literally on your best friend. On your best friend.
If he drops the ball.
Yeah, doggy
right?
dog. Let's go.
Yeah. But so I worked my ass off. Every Saturday, every Sunday, open houses.
Hitting open houses.
With intention.
So what does that look like for Chris Hardiman?
It means walk in, don't overstay your welcome, get their contact information. If there is an organic conversation where like it develops and, you know, whatever, you had some sort of familiarity with like, you know, Florida State or kids or neighborhood or something, like cool, hang out, have a conversation. Don't overstay your welcome, get their information, say goodbye, move on, make the highest and best use of your time. And then come Tuesday, I never do my follow-ups on a Monday because realtors worked all weekend. Then try and set the follow-up appointment, get them out for a coffee, build rapport, whatever that looks like.
I love that you said that because that's right out of the TLOP playbook. It's one of my biggest gripes with loan originators. I'm working open houses. I'm just not getting any leads. I'm like, what do you mean by you're working an open house? It's like, well, I sat there for 3 hours. I said, let's stop doing that.
Yeah, it's a waste of your time.
The lead comes from the relationship. The relationship comes 2 or 3 weeks later.
Yeah.
It starts with, we only go to open houses because that's where I can guarantee you every single Saturday or Sunday, a licensed real estate person is there.
Yeah.
Yes.
So
okay, so this was you.
Yeah.
And importantly, you got your wife's buy-in.
Yeah.
So you did this going out of the gate, 60, 70 hours, all in. By the way, has a baby, right?
Yeah.
Like you still have dad duties. You still have
and
husband
number two's
duties.
on the way.
And number 2's on the way.
Yeah.
Yeah.
So point one is like, oh, shocker, I worked like a relentless animal.
Yes.
Right? Like, so that's, you know, you think that's not rocket science, but like so many loan officers overlook that.
Yep.
Second is you don't need to be the guideline guru, but you have to know your guidelines. And if you are not absolutely entrenched in being the guy, because let's be honest, at the beginning of your career, all you get is the shit. You get the turn down deals, you get because that's how you sell yourself. Hey, I know you have a guy, but the next time they say no, give me a call, right? Give me your trash can deal. And I was so lucky, and I probably don't tell him thank you enough, but I had Nick, who was my best friend, who like couldn't ignore my 9:45 p.m. call. Like, hey, what does refer eligible mean? Like, what? Like, how does this work? You know, like, again, best friend. He had to take my call. But if you don't have a Nick Long, you need to be either involved in a place where you have mentorship and coaching, or like find it, right? Because if you don't have an experienced LO who can teach you or show you how to save dead deals, you're never going to break out of that point in your career. And I was crazy fortunate to have, like, you know, the guy who like specialized in 203K loans. Like, what a sicko. Like, who likes doing that, right? But like, he was the guideline guru and he knew all those things. So that was very beneficial to me to have that support system where I was actually saving deals in my first year out of the gate instead of just saying it and falling on my face.
So you didn't do like a Zenix ground school, or like the Mortgage Bankers Association has their school of loan origination. Did you do any of that for product knowledge, or
No.
you went out, got lead?
No, zero. I went out and I did sales and business development and marketing. Like, that is what I did. Sales and business development and marketing. And I went out with, and again, like, I'd started a couple of businesses at this point in my life. I had gone out and I had like secured retail account, like, you know.
Yeah, you had experience. Yeah, you were worldly. You were well-rounded and worldly.
Yeah.
And that definitely helps out. I mean, you have to have a certain amount of capacity, right? Like you're not a dum-dum, right? It's like no dum-dums, and you wanted it. Like, you wanted it badly. What was your best year? I'm guessing it was a COVID year. But
Yeah, it was a COVID year. I want to say it was 2021. It was like 73, 74, somewhere around there, you know, north of 225, south of 250 units.
Yeah.
Somewhere.
And I bet during that year you were reminded it was worth it. Like it was worth it. The sacrifice that you put in at that time with a pregnant wife, with a baby.
Yeah.
Those Saturdays and Sundays, stopping by open houses, none of it's glamorous.
Yeah.
But you set yourself up to, when the market gave you a massive opportunity, you're able to capitalize.
Those are life-changing years, right?
Yes.
Those are the years that definitely sort of changed.
When did you all open your own branch?
So at AmeriFirst,
Yes.
The pandemic gave me my first real break at landing a big account.
Okay.
That account was Weimer Group Realty.
Yes, one of the best and largest boutique brokerages in the entire state of Florida, if not the entire country.
Yeah, the numbers just came out. They're like, and I'm going to mess this up, but they're literally like 20 in volume in the country, or like something bananas like that. But they're also like, the leadership there is
tremendous,
insane.
Yes,
insane. And like, shout out Jenny, Mike, but like Emily Smith, their chief operating officer. Yeah. Wild. So I had been chasing them for like 18 months. And Emily has like the funniest stories of like kicking me out of their office and like all this stuff. But finally.
So you went whale hunting.
Oh, yeah.
Did your mentor Doug teach you that, or you just knew that from years of being in business?
I don't think Doug ever told me that, but it was something that I don't even know. Like, I don't know where it came from.
Okay.
But and it's something we always tell our loan officers is like, hey, put 5 whales on the board, touch them once a month.
Yeah.
You never know when it's going to happen.
I like that. Put 5 whales on the board and touch them once a month.
Yeah. Yeah, you never know. But
and you were able to do that during the pandemic. So you're doing a bunch of loans.
No, I was doing it leading up to the pandemic.
Okay, leading up to the pandemic.
And Emily finally, after like, I don't know, like 9-10 months, was like, hey, look, all right, you're going to get a shot, but the shot, there needs to be an opportunity, because we care so much about our preferred partners that we can't just dump another one in the pool, which of course makes me want it more.
Yeah.
So something has to happen. And do you remember in March of 2020 when the music stopped?
Yes.
So
I know that very well. Yeah. The number of calls with our CEO talking about funding, talking about the secondary market drying up.
Yeah.
But yes.
So Govy paper.
Yep.
EPO in first 60 days, that falls on the originator, right? In broker world, IMB world, whatever, it doesn't matter. So almost overnight, certainly all brokers put crazy overlays like across all credit categories on Govy paper, but even a lot of the IMB, like depository institutions.
Okay.
Overnight, your 580, as long as you have your findings on FHA, moved to like 680.
Yeah.
And like it got crazy. And that was like 2 of the preferred partners, it might have been 3 at Weimer, and the leadership / ownership, because it was 2 partners with Doug and Ron Burgum's, executive support there, made a decision at AmeriFirst, like, hey, this is an opportunity. We're going to go even deeper into this. Like, we're going to scrub income like we've never scrubbed income before. And we're going hard on VOEs. We're really going to make sure we don't have EPOs in those first 60 days, but we're not changing a damn thing.
So so your persistence paid off, but then, like always, timing. The market gave
harder
you something.
You work, the luckier you get.
Yeah,
right?
the defense. Like I always say, take what the defense is giving you.
Yeah.
Well, the defense gave you an amazing opportunity.
Yeah.
It sucked what happened in March of 2020.
Yeah.
And yes, liquidity did dry up, and yes, it impacted 2 or 3 of your competitors.
Yeah.
But you, right man, right time, right company. Your company said, no, we will onboard those loans.
Yeah.
So all of a sudden, Weimer Group Realty has all of these buyers.
They have no liquidity for like
and they have to close these transactions. So you get your opportunity.
Yeah.
And obviously, you grab that opportunity, you ran with it.
Correct.
Right? You absolutely ran with it. I'm imagining it was coming off of that success of those 2 years.
You asked me why we.
No, I'm good.
It
was that success in those years that allowed. It allowed you and Nick to finally go out on your own. Like things started transpiring at AmeriFirst. AmeriFirst no longer exists in its entity. you all were able to then say, it's time for us to step up our game anyhow. The next step was branch management, where you're going to be a producing branch manager, hire and support LOs underneath you.
Yep. So Nick and I at AmeriFirst,
Yes.
I had Weimer, he had Nickley, Asa, we had a lot of big accounts in town.
Yep.
So it helped us from just a marketing and sales standpoint. We created the Long and Hardiman group.
Yes.
Which the optics of it we were a unified force, right? It got more of our agents' offers accepted because our preferred partners controlled a lot of listing volume, all those things. But there were no economics behind the scenes. We were still separate. We had our LOs, we had our teams, our everything. When we were thinking about the next step, the next phase, AmeriFirst, great company to be at. Even during the pandemic era, I think that their top year was like 3.5, maybe almost 4 billion. We needed to see like what the monsters out there were, like what it looked like to be an originator at
a top 5 lender, not a top 50 lender, but a top 5 lender.
Top 5.
Yep.
The big boys,
Yeah.
right? So that's where we looked, and we ended up at GR,
Yep.
now Rate, and we went the partnership branch model, and there we, because all of our people who had come and we built them up over the years, we started that partnership branch, and that partnership branch was actually the highest volume partnership branch in all of Rate in the country.
Oh, wow.
Yeah.
Okay.
Yeah, and so we started that up, and we did that for almost 3 years.
What's the difference between a partnership branch and the other type of branch? Like, was there a corporate branch, a partnership branch, and was there ever a P&L branch?
A partnership branch is what
a
they call it.
Okay.
That is a P&L branch.
Okay, so you could either be a corporate branch or you could be a partnership branch. You all chose partnership branch, and you ended up having the largest by volume partnership branch when you were there. But then let's jump into where you are today, because this is pretty fascinating, because it's a pretty quick rise.
Yeah.
Especially on your end. Nick's a little bit longer, right? But at the same time, when Nick was gaining experience as an originator, you were gaining experience as a business executive, an entrepreneur, and a business operator. So,
correct.
But it's now you, it's Nick, and it's Nick's dad, your mentor, Doug Long.
Yeah.
You all own Fusion Home Loans.
And one more guy, Lee Gross.
Okay. I don't
Which,
know Lee.
So he's based in California.
Okay.
He was a C-suite executive and ran and operated as CEO for the last couple years, a Chicago-based IMB Platinum.
Okay.
Platinum.
I've heard of Platinum, yes.
Yeah. And then we have to mention our biggest partner. Which is Acrisure Mortgage.
Yes.
Right.
Yeah, because technically you all are half owned by Acrisure. And
they own half of our company.
And then the 4 of you
right.
own the other half.
Correct.
Which
and 7 of our loan officers are also partners in the company.
Oh, that's so cool.
Yeah.
That is so cool that you're able to allow them to buy in or earn in some equity.
Yep. And not earn in, like they wrote a check.
Awesome.
And they were afforded that opportunity, and they're in it, and they're vested, and it gives them visibility to financials and growth and all the things, and it's super exciting.
That's really cool. It's interesting. When people ask me, hey, Dustin, if you were to get back into the industry, like, how would you do so? I'm like, well, if I ever got back in, like, I mean, I'm in it, right? I'm in it to win it, but I'm in it on the influence coaching consulting side of things, because I truly believe I can impact the most lives here.
Yeah.
Right? I can impact the most borrowers, the most realtors, if I can impact the most branch managers and LOs.
Yeah.
Right. So I think I can leave my legacy, but if I work, because that's, as a consultant, you get that question. I'm like, well, there's about 4 ways you can do so. And I'm going to lead to the way y'all did it, because I kind of dig it.
Yeah.
The first way for someone like me is I'm going to buy a shell. Right.
Which is where we started.
It's where you started. And if you buy a shell, to give you an idea, it's going to cost you a couple $1 million, plus you need another 5 to sit on the sidelines for your net worth requirements. Right. So you're all in about $7 million if you're going to buy a shell. But there's advantages to buying a shell. A shell is basically a IMB that's in quote unquote good standing, but isn't really operating at all or very minimally.
Yeah.
If I don't want to buy a shell, what's the exact opposite of that? Well, the exact opposite of that is I call Chris Parker over at UWM.
Yeah.
And I say, Chris, I'm going all in. I'm starting my own.
It's Friday. I want to be a broker shop on Monday.
Yes.
Yeah.
And he's my first phone call. I'm not saying that UWM is going to get all my business. They can earn my business.
Yeah.
But I'm saying that they're my first phone call because they make a living off of helping people like me start my own mortgage company.
Yeah.
Right. So those are my two ways.
And by the way, they do a good job of it.
They do a really good job of it, like a really good job.
Yeah.
So then it's like, okay, if I didn't want to do that, well, what are my two other options? Okay, I and you, not everyone could do this, but you and I can go buy a mortgage brokerage, right? Let me go find someone who's already doing $50, $70 million in volume. I don't want to go through all the rigmarole of having to start my own.
Yeah.
I'll just buy one. Like for me, it's my buddy Jason Ziegler here in Orlando. I reach out to Ziggy. He has Verisol. It's his mortgage company. Hey, Ziggy, man, what do you think about bringing me in as a partner? Or better yet, let my partners and I buy you out. It'd be something like that.
Yeah.
But the third way is the way the last way, right? It's the fourth way.
Yeah.
But if I'm going to that middle ground, it's what y'all did.
Yeah.
Y'all said, who does an amazing job on a national level? They already have the warehouse lines, the technology, the compliance, the IT, the HR, the investor relations, loan delivery, servicing. They have everything.
Yeah.
Let's just go to them and say, do you want to be 50% partners with us? At which point, they throw up $1 million. You guys probably throw up $1 million. But voila, you have your own IMB under your own brand, right?
Yep.
Your own EIN. It's a JV if you come from the builder space the way that JV was.
Yeah.
But I appreciate you saying that, hey, by the way, like it is Lee, it is me, it is Doug, it is Nick, it's this guy Lee, but we also have this entire organization called AcroShare behind us.
Massive. Right?
Yeah.
10 billion. Yeah.
So then what was the catalyst? Like, how did you know that now was the right time? What made you want to do it? Like, what was your why behind it? And then more importantly, we'll round it out with this. What does the future entail for Fusion Home Loans?
If you're a licensed originator who's closing loans, but you're not consistent, this is for you. If you're brand new or just looking for motivation, trust me, this is not for you. Most LOs don't need more information. They need structure. They need proven processes and somebody to hold them accountable. T-Lob's Originator Coaching gives you weekly live coaching, scripts top producers actually use, and step-by-step business systems you can implement immediately. Not someday, we're talking day one. You're not watching videos alone. You're executing in real time with other originators who take this seriously. Right now, you can try it free for 2 weeks. That's 2 full weeks for free. You'll sit in on live coaching calls. You'll get access to the frameworks and see exactly how top producers run their business. If it creates clarity, if it creates momentum, or even if it puts wins on the board, you keep going. If it doesn't, no worries, you can cancel. No pressure at all. Click the link, start the 2-week trial, and finally, build this like a business, not a side hustle.
And Chris Hardiman.
Yeah. So that's a lot of components there. Why was it the time?
Yeah.
Because it was the next challenge.
Okay.
Right. It was the natural progression.
Yes.
It was. I didn't.
Was it a money play or an ego play?
60-40 ego money.
Yeah. And by the way, ego not in a bad way. Ego not in a bad way, but
it's just like
I'm bored. I want another challenge.
This is it. This is the next challenge.
Yeah.
We build this thing.
It's, by the way, an adventure. You moved to California once because you wanted an adventure.
Yeah.
This is your next adventure.
Yeah. In terms of market timing, the market looked really bad to me, which is where you always want to be starting out.
Yes.
Right? Like it was rough, which affords recruiting opportunities and getting a little, slower volume years to get your ops in place, get your SOPs established, like do all the things. So like you're not getting punched in the face with volume while trying to start a company.
Yeah.
So from a timing the market perspective, that seemed to be the right way to go about doing it. The AcroShare decision was interesting because it wasn't the path that we started to go down. So the path that we originally went down was the purchasing the shell path, right? And so that shell, that's what Platinum was. So Platinum they'd sold off the majority of their servicing. They had I think about 35-40 million left on the books. They were, Jenny, seller servicer, Fannie, Freddie, licensed in 49 states. So they were the ideal shell. Of course, when you're looking at, acquiring an entity as opposed to an asset purchase, you have to think about what potential liabilities you're acquiring. But we'd known those guys forever. Like really Doug.
Yeah.
Doug knew what kind of mortgage shop they ran, so we were comfortable with that. But to your point, we needed to purchase the shell, have the liquidity requirement set aside, but also build HR, build secondary, build capital markets, hire the underwriting, hire the chief credit officer, right? So our number at the end of the day ended up coming in closer around like 10 million.
Wow. And that's 10 million you have to go raise.
Correct.
Right. So now all of a sudden you are bringing in business partners.
Yeah.
I mean, you are. It's just, it's going to be a series of investors.
You're giving away part of the company to someone.
Yes.
Right? Like, because you got to go out and you got to raise that capital, and you're not getting that debt right out of the gate. You have to go out and you have to, Nick and I, because Doug and Lee said, hey guys, we've already
done this.
Doug's like, hey, I've already signed $1 billion personal guarantee. That's like a hilarious, like, I'm not doing that again.
Yeah.
So Nick and I need to go out and PG a couple $30 million warehouse lines, right, to keep that thing going. And it's funny, we were there. I mean, we were $500,000 shy of our like hurdle to like break escrow and go and do all the things. And that's the path we were going down. And because of Joe Nunziata's deep history, talk about a respected competitor.
Oh,
right?
Always.
CEO of Acrisure Mortgage.
Yeah, formerly FBC.
Formerly FBC. He approached Doug originally, and there's like a million overlaps of like Orlando communities why this conversation occurred. But they're old friends, respected competitors, all the things. Asked for a lunch with Nick and I. We went out and we had lunch and we talked about what the vision was and the goal was and all those things. And ultimately said, hey, like, crazy idea. We kind of have this back office built already because we've been doing it with Home Builder 1, Home Builder 2, Home Builder 3. Never done it with a retail shop, but
why not?
Why not, right? You take this massive fixed cost, turn it into a variable cost per loan, right? Utilize the back office, do all the things, all the pieces. Substantially less capital raise. The friendly parties, there's always opportunities down the road for whatever we want to do together in terms of expansion, right? Would you look at doing it that way instead?
Yeah.
So I will tell you, like, the hardest part of the entire process, mainly for Doug and myself, because we led the capital raising side of it, was going back to everyone and saying,
we don't need your money.
We're not going to take your money anymore.
We don't need your money.
Yeah. So that was difficult, but everyone, it was a friends and family raise. So like, we weren't going to institutional groups.
Let's end on this. What is the future? What's the future? The future of Fusion Home Loans. There's people right now that are digging you, that are tuning in. They're going to want to reach out. Right? They're going to want to reach out and figure out, hey, is there a spot for me?
Yeah.
Why would it make sense for me? But more importantly, give them a taste of what's the future. Because I can't imagine the $400 million that you're going to do this year is even close to a fraction of what the future looks like in your head.
No. So we wanted to be at $1 billion in annual originations in sort of our first year. 2026 is going to be our first year. We'll fall a little shy of that, but that's okay. We're not angry about it. The target is $5 billion in 5 years. That's sort of what we wrote up on the whiteboard, and that's what we're chasing for, and that's where we're at.
You're working backwards. You had the game plan.
Yeah. So we're now licensed in 20 states plus DC, brick and mortar in 4 states, and we're quite frankly, we're looking for competent and skilled mortgage professionals that want to grow and lead and expand in those other markets.
Yeah,
right?
You're looking for people in growth mode.
Correct.
That want to come in and be a part of every solution that they've maybe never been able to be a part of. You're building something brand new. Right? Like, based on what you and Nick know really well, but also probably what you notice you wish was done better or different in the industry. Because you're bringing, you guys are in your late 30s.
Yeah.
Versus guys and girls in their mid to late 60s.
Yeah.
Running IMBs. And it's nothing against the people in their late to mid 60s. Well, it's just there's a new element, there's a new energy that I think y'all bring. I think I bring it to the influencer coach stage. How many people in our industry I mean, if I was looking up to you, no offense, if I was looking up to you 25 years ago, first, thank you.
Yeah.
Thank you. Like, thanks for being that person.
Yeah.
But also enjoy retirement. Like,
yeah.
Enjoy retirement. We got this. The rest of us, we got this. Like you're leaving the industry better than you found it. So I'm guessing you guys are maybe in the same boat from a executive sales leadership standpoint with Fusion Home Loans.
So yeah, very similar. It's funny when Nick and I decided we wanted to do this, right? Like having an IMB, right? You have all the things. You have capital markets, secondary. Like you have a lot of things. Like, I have to look at my corporate P&L and like understand like my derivative every month and like how that like play like things I've never had to worry about before. Nick and I, we know originators, we know coaching originators, growing originators. But when we decided to do this thing, it was funny because Doug at the time was working at Planet, again, in a national sales role. And he was recruiting us. He wanted us to go to Planet. And I called Doug after a trip that my wife and I were on with Nick and his wife. And I was like, hey, man, good news is we're going to work together again. Bad news is it ain't going to be at Planet. We're going to start a company, and Nick and I need some adult supervision. So we're going to need you to come back out and do this thing for a couple years, you know, till you get ready to hand over the reins. Lee was the CEO of Platinum at the time, and we kind of did the reverse sell on him too, because when we went this other direction, we were like, Lee, we need a seasoned capital markets, it's finance guy, accounting guy, like that's Lee. So from an executive leadership standpoint, we have these two. Couldn't ask for more seasoned mortgage banking professionals. And then Nick and I get to put this fresh, I say young, 40, but this fresh, young look to what this industry can be and where it's going to transition into. We've been really lucky to make some key executive hires with some people in other markets who are very aligned, very similar. We're leaving tomorrow for a conference out in Vegas, and our National Director of Business Development, Skylar Welch, is on the main speaking panel talking about becoming unforgettable to the client, which is such an important topic, right? As AI freaking levels the playing field. So we're in a growth mode. We're very well positioned for where we want to go. And that's it, man. Just I'm back in 60 to 70 hours a week of grind mode.
Last three questions. They're the quick hitters I warned you about an hour ago. Favorite book?
The only one I've like reread multiple times is Atlas Shrugged. But I have a lot of favorite books. But Atlas Shrugged. Yeah, that's
never heard of that book, and you've read it multiple times.
Oh yeah, I'll give you my copy.
Okay, Atlas Shrugged.
With my highlights and my
notes. I shrugged my shoulders.
Correct.
Cool. Second one, piece of advice that you're going to make sure you raise your kids getting from you because you had to learn it the hard way. So you didn't learn it at Florida State. You didn't learn it at Olympia High School. Like you had to learn this through those grinding years, or maybe you learned it last week. That you're like, man, I'm 40 years old. I wish someone would have told me this like 20 years ago. Anything that stands out? And if not, it could have been something that you're grateful that because you had a great mentor or great formal education that it was taught to you early and it's really carried you.
I don't, that's a tough one. I always try and teach my kids that, kindness is everything. Try and understand what the person on the other side of every interaction you have every single day is going through that you might not know about, because I think that goes a really long way in empathy, and that's something I've had to work on a lot. And we can do a whole nother podcast for my mental health journey. Empathy and kindness is everything. So, always carry that with you throughout life. And like to pull it back to this, everything is sales. Every interaction, everything that you do day in and day out, I don't care if you're an attorney, a physician, like I don't care. Everything is sales.
Yeah.
Everything.
And sales is influence. Sales is not getting someone to do something they didn't want to do. Sales is influence and it's storytelling.
So
yes,
second favorite, how to win friends and influence people.
There we go.
That's cheesy title.
There's an oldie but a goodie.
Holy crap, right? Like,
so the last best question, how do people get a hold of you? If they want to connect with you, learn more, like what's the best way to get a hold of Chris Hardiman?
I mean, Instagram, of course, is always easy, but I have a
What's your IG?
It's just the _ Hardiman. But if you search for Chris Hardiman, you're gonna find me.
Okay.
Like, you're gonna find me. And then Chris at Fusion HL is if they want to have a direct conversation.
Chris at FusionHL.
That's it.
.com.
Yeah.
Awesome.
Yeah, super easy.
Chris, this has been an absolute treat.
This is really fun.
Because you're local, we should do this once or twice a year. Like
I'm all for it.
We really should. I'm gonna find a way to get you on one of my master classes coming up. Well, I'd like to figure that one out. Talk offline. Ladies, gentlemen, boys and girls, children 18 plus. He is Chris Hardiman with Fusion Home Loans. I'm Dustin Owen with Loan Officer Podcast. We just went super long. I trust that we entertained you. I trust that we educated you. Make sure you're loading up the comment section when you're watching on YouTube. If you haven't subscribed to YouTube yet, please know you're missing out because there's more than just the podcast on our YouTube channel. It is a great way to get free coaching and free sales training with 400 other additional types of content, not just podcast related. If you're on Spotify and Apple, give us a 5-star review. It helps other people find this content. It helps other people recognize that this content doesn't suck. On that note, he's Chris, I'm Dio. That's all the time we have for you today, but we look forward to catching you on the next episode. Peace.